Welcome back, options traders, and we made it to another Friday, and we've got another great topic here. This comes to us from one of our newest members, and he was asking about mean reversion, and he didn't really say exactly what he was looking for, but there's a lot of different paths we could go with this topic. So I think this is probably what he was getting at, is why do prices revert to the mean? But let's start here, and if other questions come up from anyone, please post, and we can always do some more videos in the future about them. But mean reversion is a very interesting topic, and there's a very good reason why prices tend to get pulled towards the middle. And there's also some good implications for short-term traders. So let's go find out more about mean reversion. As always, before we do, please be sure to click like and subscribe. It's greatly appreciated and helps to promote the channel. So probably the easiest place to start for combinations is to look at a coin flip. And we're going to say that we flip a coin twice. We can get heads heads, heads tails, tails heads, or tails tails. Those are the only four possible combinations that we could get from flipping a coin twice. Now, to model this for the stock market, let's say that heads means we advance in price by a certain amount, whatever number you want to make it. We advance by 1%, a fraction of a percent, 10%, it does not matter. You're going to come to the same conclusions. But heads means we're going up, and tails means that we're going down. Now, some people say, well, wait a minute, can't we go sideways? Well, yeah, you can, but as you'll find out in a moment, that's really no different than going up and then down. We can still get to a sideways motion. So to make it simpler, we're just going to assume that there are only two states, up and down. So the first thing to notice is that if we're going to use this to model our price movement, that there's only one way that we can go up and then up. There's only one way that we can go down and then down, getting two tails in a row. But there are two ways that we can get one of each. And this is really the step that people usually miss intuitively. They'll say, well, if you can go up and then down, that's only one way to get there. And that's not true, because we could go down and then up and land in the identical spot. So notice that we have twice as many paths to get to this state as we do to either going up, up, or down, down. So if we can say that we can earn 10% at each step, let's say. So I make 10% on my money, I start with $1, I end up with $1.10. I make another 10%, I end up with $1.21 after two steps or two periods. Again, these periods could be anything that you want, days, minutes, weeks, anything. That's just the amount after two steps. But if I go up to $1.10 and then take a loss of 10%, I actually end up with a slight loss. I started with $1, I've got 99 cents. I lost 1% of my money. If we end up going down first with tails and then up, we still get 99 cents. So again, there are two ways to end up with that identical value. If we lose in both periods, lose 10% and then lose another 10%, we actually have 81% of our money, or a loss of 19%. So again, notice that there's only one way to get this advance here to $1.21. There's only one way to get to 81 cents, but there are two ways to get to 99 cents. And again, this is really the key insight that a lot of people miss. They'll say, well, you can go up and down, which would give you 99 cents, and they start to think that there's only one way to do it. They don't realize there's a lot of different paths that lead to the same outcome. Okay, so let's extend this thought now with more of a lattice tree here. This is really the essence of a binomial pricing model. But instead of making these go to zero for the strike or below, we're just going to assume that it's investing $1. We're going to make 10% every time we go up. We're going to lose 10% every time we go down. So notice right here, we start with $1. In the first period is this first column, let's say, and we can go to $1.10, and then in the second period we go to $1.21. That's what we just saw. But we could also do this. We could go up to $1.10 and then down to 99. We could also go from $1 down to 90 and then up to 99. See, there's two ways to get to 99. And then finally, we could start with a dollar, lose 10%, lose 10%, and end up with 81 cents. So the point to see is that there are just many more paths, in this case, twice as many, that get you to 99 cents as they do to the extremes. So what happens if we look further into the table? Let's take this one right here to $1.08. How many paths are there? Well, that would actually be kind of tough to count. I can see that there's one here. I could come up and then down this way. I could do this. You can see there's a lot of different ways. We could come down to here and then up. It'd be hard to keep track of, but we can figure it out mathematically. And here's what we can do. I can look at a simple case and say that there are 3 steps I could take up and 2 steps down. That's one way to get there. Very obvious. 1, 2, 3 steps up and 1, 2 down gets me to $1.08. But how many are there? Well, mathematically, for all the math people out there, know this is a simple combinations problem. So I have 1, 2, 3, 4, 5 things. I've got 5 arrows. So we would just have to take 5 factorial. There's factorial just means we're going to take 5 times 4 times 3 times 2 times 1. So what we're saying is that there are 5 ways that I have to make my first choice. I could choose any of these 5 arrows. Once I've chosen one, there are 4 remaining ones. So I would have to multiply by 4. Once I've chosen that one, I would have 3 left, and so on. However, you can see that some of these arrows are colored the same. So I shouldn't say that this arrow is any different from this. They're all green. I can't tell those apart. So the formula is we have to take 5 factorial, but then we have to divide out 3 factorial because these combinations would look exactly the same. And then we have to divide by 2 factorial over here because those would look the same. Now I'm kind of skipping over this quickly. It's not really the important part. But if we go through the math here, this comes up to be 10. So there are 10 different paths, 10 different ways to get to this $1.08. But notice here in this column, right? So here's 1, 2, 3, 4, 5. This is like 5 periods or 5 steps. There's only one way to get to $1.61, and there's only one way to get to 59 cents, but there's 10 ways to get to $1.08. And if we went through the math for this one, there would be 10 ways to get to 88 cents. There's 20 ways to land in the middle. Only one way to land at the extremes. So which is more likely? You're more likely to land somewhere in the middle, simply because there are more paths that lead to the middle than out to the wings. Let's try a harder one. Let's come out here to 96 cents. How many ways are there to get here? Okay, so as before, let's just look at a simple case, just to kind of get our bearings. Let's just walk along the edge up here, and then once we get to $1.46, let's walk down to 96. So we can see that that is one path. Not the only path, but it's one. It gives us some good information. So now I can figure out how many paths there must be. And I can see that there are 8 arrows, so I have 8 factorial. But I've got 4 alike over here in green. I also have 4 alike in red, so we wouldn't be able to distinguish those, a red arrow from a red arrow. So I need to divide by 4 factorial twice. So if we take 8 factorial divided by 4 factorial divided by 4 factorial, we get 70. There are 70 different paths that will get you here to 96. And if we went through the calculations for $1.17 and 79 cents, there would be 56 paths. Not as much as 70, but still a pretty good amount compared to only one way to get to 214 and one way to get to 43 cents. So that's why as you're walking through here, kind of meandering around, right, you shouldn't expect the coin flip to go heads, 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 heads all the way up. Could happen, but it's not likely. We end up meandering kind of through the middle. And so it can make it appear that there's some kind of mysterious force pulling us down here to the center, and it's just the simple fact that there are far more paths that lead to the center than lead to the outer wings here. So some of you might notice or remember from earlier school days a thing called Pascal's triangle, and that's an easier way of coming up with the solutions. So if you look at this array here and we flip it 90 degrees this way, this is what Pascal's triangle looks like. It's a series that will start with 1 at the top, and here's a nice colorful one from the web. And what you do to create the triangle is you simply add the number above. So we just take 1 down here and then we copy this over. This one down here you can think of as 1 plus 0. There's a 0 out here. But this 2 is the sum of these two in the middle. 1 plus 1 is 2. And this one over here is the sum of its neighbors, 1 plus 0. So we get 1, 2, 1. We do the same thing. This pink one here is 1 plus 0. This 3 is 2 plus 1. We drop that down. This yellow 3 is 2 plus 1. We drop that down. And this one is 1 plus 0 is 1. So we just keep working through it. And there are a ton of really fascinating patterns and things that spring up from Pascal's triangle. So one to point out is that each row is exactly twice as big as the previous row. So here you can see 2, 1 plus 1 is twice as big as 1. Here, 2 plus 1 is 4, twice as big as 2. And that should make sense because when you understand that, let's say this 1 is the sum of this 1 plus 0, and this 2 is the sum of this 1 plus this 1. You see, we've already counted this one. We've counted it twice. And then this 1 is the sum of this 1 and 0, but we've already counted that over here. We've counted each thing twice, and that's why each row becomes double the amount. We also see some other interesting patterns. We get a series of 1s along this diagonal. We get the counting numbers, 1, 2, 3, 4, 5, 6. Here are what are called the triangular numbers. These are numbers that if you think of stacking tennis balls, right? If you had 3, you could put 2 on the bottom and 1 on top. It would look like a triangle. That's why they're called triangular numbers. The next triangular would be 6. You'd have to have 3 on the bottom, 2 on top, and then 1 more on top. And so these are the triangular numbers. If you weed out the odds and evens, you get what's called a Sierpinski triangle. There's lots of really fascinating things that come out of this. We can also see this little L shape. Pick any L shape. If you come down the diagonal here, 1, 2, 3, 4, add those up, they add up to this guy right here, 10. If you take 1, 2, 3, 4, 5, they add up to that one right there, to 15. And there's a very good reason. You can probably step through it and see why that must be. But none of that is going to really help us really for this video. It's just to show how many more combinations there are in the center. So look at this. I mean, you start going through lots of steps. You've got, this is one we just saw, 70, 56 on either side, 28. So as you meander through this maze here, are you more likely to land on the one path that could get you here? Or the one path that could get you here? Or the 70 paths that can get you here? Or the 70 plus 56 plus 56? So that's 182 paths that can get you just in these 3 cells right here. That's a lot. Certainly a lot more than 1 or a lot more than 8. You're far more likely to land somewhere here in the center. And so that's really the essence of mean reversion. It looks like some mysterious magnetic force that is drawing your prices towards this long-run average, but it's simply the fact that we have far more paths or far more combinations that can get you to the middle than can get you to the extremes. So lots of different takeaways from this for options trading. I think those are separate videos, but let me just share one with you for short-term traders. Let's look at this one we saw earlier. If we go up and up, that's only one way to get there, but I can go up and down to get to 99. I could go down and up to get to 99, and I can go down and down to end up with 81. So in the short run, now this is not going to be true out here, but in the short run, look what happens. We have one way that we end up with a gain, right? We start with $1. I have one way to get to a gain, to $1.21. That's that path right there. But I have 2 ways to get to this loss, going up, down, and then down, up. And I have 1 way to get to this loss. So out of the 4 possibilities, 3 of them lead to losses. the odds are overwhelmingly in your favor of ending up with a loss. And this is also why I warn traders that when you start doing things like, let me get out as soon as I have a loss or at a 50% loss and I'll move on to something else. And then when I do get a gain, I'll clip it because, can't go broke taking a profit and I got to lock those gains in. All you're doing is picking up nickels in front of bulldozers, and you're going to end up with losses in the long run. That's just the mathematics of it. Now, I know there's a lot of people, when I've done videos like this, put the thumbs down. They say, no, that's not true. You got to close for a 50% loss. Trust me, that is just an information cascade that has been handed down for generations that people just believe it. It is not mathematically true. But I think that's a very good visual right there why in the short run the odds are against you. So I hope that gives you some insights into mean reversion, why it's there. It's not really a mysterious force. It's just the fact that we have so many combinations where we end up in the middle. Think of it like flipping a coin 20 times. Probably going to have closer to 10 heads and 10 tails as opposed to all heads or all tails. That's really what's happening here. There's just a lot more ways to end up in the middle. And so yes, prices do mean revert. Be careful of those stocks that are on rocket ship launches. Make sure you understand your options and make sure you understand how to hedge, roll, and morph those positions so that you can stay in it while managing the risk of mean reversion. And for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a Candlesticks and Technical Analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.